Hey YouTube family, it's Dinko the Realtor. Today we're going to be analyzing a whole lot of data that I've compiled that's going to show you what's going on in the Utah housing market. You're not going to get this data anywhere else, so stay tuned. And remember, Dinko the Realtor has your back whenever you're ready to buy a home anywhere in Utah. So if you need me to sell, buy, the contact information is down below. And real quick, before we dig into that data, I want to show y'all what's going on in the economy as the economy hasn't stabilized. Right, we have the fight against inflation that hasn't fully stabilized itself either, though the Fed feels like they're getting a grasp on it. And then right here, regulators step in after PacWest, Western Alliance shares plunge as investors fear repeat of First Republic, Silicon Valley Bank, and Signature failures. Now, banking crisis, inflation is not indicating that things have fully stabilized. Has the housing market fully stabilized? Well, let's dig deep down here and take a look at some of the information, the data I compiled. Right here, we see that May, $600,000 median price, that's when the housing market peaked. Then things tumbled and it went down to $510,000 in January. Now, prices have started ticking back up a little bit. Is that indicating that the housing market is stabilizing? Well, if the economy doesn't stabilize, the housing market's not going to stabilize. But if they really do a soft landing and the recession isn't that bad, maybe we are. But let's analyze the data. So right here, if we take a look, we see that the price now is $535,000 compared to $600,000 in May, and that is negative 10%, where we were almost negative 15% from the bottoming out in January. Now, I created my first video in June where I predicted we would see a 10 to 30% housing correction, the great housing correction, which is essentially a mini crash. I mean, 10% any other time in history would be considered a mini crash. But right now we're in the great housing correction, and is it over with? I'll link that video down below. That way you can see in June, I was giving this data at the beginning of 2022 to my clients, and then I decided to upload the information to YouTube, and that's how I created this YouTube channel. So right now, let's go analyze some more data and see what's going on. Right now, negative 29% is the amount of homes sold in April versus April of 2022. So 2,827 units were sold compared to April of 2022, where we had a year ago 4,000 units sell. So if we are negative almost 30% with the amount of units that were sold, how have prices ticked back up? That can't happen, right? Well, there are two explanations for that. Explanation number one is right here. New construction has the highest share that it's ever had. 1 out of 3 homes that are for sale on the MLS right now are new construction. And let's take, for example, the same city, same suburb, and there's one neighborhood that is new construction and there's one neighborhood that isn't new construction, but they're identical. The new construction is always going to be selling at a higher amount, and that is going to be indicating the prices are going up. Now, days on market has started coming down. We were at 50 days on market in December, and now we are at 29 days on market. So is that indicating that things are stabilizing? So right here, 6,000, and before I dig into this information, this is going to explain everything. But right here, we right now have 6,810 units for sale on the MLS. We actually fell down to 6,200. And inventory always goes down during the holiday season, during the winter. Last year, when the inventory peaked, it was 10,000 units in October. And then during the holidays and winter, inventory started going down, which is normal. Last year, when inventory started going back up, it was March, and we had 2,000 units on the market for sale. This time when inventory started going back up, right here, we have 6,200, and right now we're almost at 7,000 units. You'd have to go back all the way to mid-February. That's the last time that we had 7,000 units for sale on the MLS. Well, if inventory is starting to go back up, does that mean prices are going to continue going up? Are they going to stabilize? See, there's a whole lot of different conflicting information, different data. And remember, housing is a safer investment. It's not like a stock. It doesn't just tumble down overnight, within 1 week. Housing is always the last thing to tumble. In the economy, we haven't seen anything pop off yet. So if something does, housing definitely will be further affected. Now, right here, we went over these graphs a few times, but where are we, right? Right here, housing bubble 1, we see that it didn't just happen overnight in San Francisco. It didn't happen overnight in Seattle. So you have to figure out, where do you think this data is leading? Now, I want to show y'all the data that I compiled that's showing why prices have started going up, even though sales are down 30%. So let me pull that up right here real quick. All right, so here's the data. So we're negative 30% year over year with the amount of units being sold. And how is inventory just not skyrocketing? Why are we seeing such a small gain in inventory finally in April and not in March like we saw last year? Well, right here, this is going to show you why. And let me remove myself so I'm not in the way. In January, no biggie, we had 73 units less entered on the MLS for sale. So what this is comparing is the amount of homes that were entered for sale, single family, condo, townhomes that were entered for sale on the MLS. We see that that is at a much lower amount this year compared to last year. So right here, let me remove myself again. Okay, so right now we had 584 units less in February. Again, not too big of a concerning deal. However, in March, there was 1,254 less homes entered for sale on the MLS, and in April, it got worse, where there was 1,687 homes entered less. There was 4,000 compared to a year ago, 5,691. That is a whopping negative 30%, which essentially washes out the negative 30% that we have with the buyer demand. That is why the housing market looks like it's stabilizing. Now, if the economy stabilizes, sellers decide that they're never going to start selling their houses again, then potentially the housing market has stabilized. Let's say that we had only 200 in March less units and 600 only less in April, we would have an additional 2,000 units and we would be at 8,000 already in May, right? So let's say finally sellers start selling their houses at a higher rate in May as the school year is approaching to being wrapped up, right? Now, what if we gain 1,000 homes and all of a sudden we're at 8,000 going into June? Well, that would indicate that the housing market hasn't stabilized, as then inventory would start piling up. It just depends what's going to happen with the economy, what's going to happen with the inventory. Are sellers just never going to sell their houses again? Is that inventory going to start ticking up? That is why we have to follow so many different things when it comes to the housing market. People get married, people have kids. So housing is always a necessity. Stocks aren't. Stocks are also liquidated with a click of a button. A house is not. It takes time to sell. And that's why real estate is considered a safer investment because it's not volatile as stocks are. What's going to happen if unemployment does go up? What's going to happen if inventory starts going up at that same pace that it did last year, but that buyer demand is still 20, 30, or maybe 40% like it got last fall, where we were seeing October and then into the winter, November, December holiday season, negative 40% demand from buyers, meaning there was 40% less units being sold year over year. So if that happens this time around, and we're already at 6,000. So in April, when the inventory started going back up, we were at 6,000 in April. Last year in March, it was 2,000 when the inventory flipped and started going back up, and we ended up at 10,000 in October. So does that mean we could end up at 10,000 at the end of summer? Or if we end up in October with 10,000, would that indicate that things have stabilized, or would we see prices starting to drop again, and then maybe they drop into 480, 470, and they drop even further than where we were at in January of 2023 here and at the end of 2022? Housing has a whole lot going on. The economy has a whole lot going on. You're not going to find this information anywhere else. Do me a favor, smash that like button, do yourself a favor, subscribe, and until next time, have a great day.